It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Welcome back to Trading Stocks Made Easy. It is I, Tyrone Jackson, the wealthy investor. Now, today we're going to talk about your age, your money, and your wealth. Your age, your money, and your wealth. And we're going to wrap that up in one big ball as it relates to the stock market. All right, so I've been talking to you about this digital era that we're in now. If you listen to some of the prior episodes, I've talked to you about this golden age of companies that are making their money online, selling directly to the consumer. We're seeing more and more apps, websites, and major brands priding themselves on how well they're selling directly to the consumer. So, for example, Dow component Disney launched their version, essentially, of Netflix with their catalog. The earnings came out not too long ago, and at the time of this recording, Disney has 95 million paid subscribers on the Disney Plus network. They got there within 14 months. Netflix has 100 million paid subscribers, and it took them 7 to 10 years to get there. So clearly, Disney is doing very well. All that subscriber growth is going to feed into what? Their top line and their bottom line revenue growth. So when you're buying, investing, or even trading stocks, what are you most concerned with? How much top line revenue, how much bottom line revenue, and dividends are coming from the company. If you're buying cheap stocks that are under $10 a share, you can't get that information with regard to the top and the bottom line. That's why we stay within the Dow and the S&P. Now, when we're talking about investing in stocks, you realize the reason to buy shares is because you think in the future those share prices will be higher. So if I'm investing in a Dow stock that's currently trading at $90 a share, really, in the end, the only reason I want to own that stock at $90 per share is because I think it'll be worth $180 a share, let's say 5 or 6 years from now. I'm not jumping in and out of that stock. I'm investing in it because its future growth from an earnings point of view will drive the stock higher, or at least that's what I believe. Now, we're all investing in stocks for future stock growth, and that's where the wealth comes from. But there are some stocks, like I have a saying in the Wealthy Investor Program, you never buy the stock if you don't understand the story. There are some stocks that are really risky. And why are they really risky? Because that company on its books may be carrying an inordinate amount of debt, right? So although a company is generating revenue, if it has $5 billion worth of debt, it's really not profitable. Even though the stock keeps rising, this debt that they're carrying has to be paid off. The fact that that company has debt means that they can't pay you a dividend. Now, what is a dividend? You've heard me talk about this before. It's your share of a company's profits paid out on, generally speaking, a quarterly basis. So what does this mean to wealth building? Well, if you're 21 and you just open an investing account, do you really care about dividends? Probably not. You're there for the appreciation in stock price. However, if you're older, let's say over the age of 60, then you want to own shares that all pay dividends. In fact, the older you get, the more conservative you want to be with money, and you may only be investing in companies that pay a dividend. So, what does investing have to do with dividends and your age? And the formula basically goes like this. The younger you are, the more risk you can have in your stock market portfolio. You can take a shot on those companies that don't pay a dividend, that have enormous debt, but yet the stock price is actually rising. When you're older, you're generally looking to lower your risk because you're not trying to lose the money that you have in the stock market. So even if you don't get incredible growth in your portfolio, you're happy with what? You're happy with slower growing stocks that pay a dividend. Now, what's really interesting if you apply a millionaire mindset, right, is very often in the real world, we're taught to think in terms of dichotomies, which is I either have a high-risk portfolio or I have a low-risk portfolio. The reality is when you learn how to trade and when you learn how to invest, your goal is really balance. You see, if I'm 60 years old and I still want to grow my money, instead of taking all of my money and putting it in conservative stocks, can I take 70% of my money and go super conservative and 30% and go growth? Of course I can. Or if I didn't want to have that much risk, companies that are still growing with large amounts of debt, can I go 90% conservative and 10% growth? Yes. What's going to determine this combination of risk? Something called your risk tolerance. Now, I share all of this with you because it's simply not enough to just have, an open trading account that you got in and you put $500 in or you put $1,500 or $15,000. These are the nuances in choices and decisions that you must make when investing in stocks for the long term. If I'm investing in companies that have heavy debt, those share prices might not move as fast as a company that doesn't pay a dividend, but that has no debt, right? So these are some of the factors that we have to think about when we're investing and trading in the stock market. Now, one of the best things that you can ever do is pass wealth along to the next generation. So, for example, let's say you want to get started in the stock market and you want your kids to have it better financially than you do. So what could you do? You can open an online brokerage account for a 1-year-old. Did you know that? As long as they have a social security number, you can take a niece, a nephew, and you can open an online account for them, and you could buy stocks like Disney, right? So listen to how wealth is transferred from one family or one generation to the next. If you open an online trading account and you just bought Disney shares today for a 1-year-old child, niece, or nephew, do you think those shares will be higher 2, 3, 5, 10 years from now based on the fact that Disney has low debt and 95 million paid subscribers? Would Disney make a great investment? Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
So I left you with a little cliffhanger there before the break. Would Disney stock make a great investment? Well, it depends on your risk tolerance. We know that it's in the Dow, and we know it pays a dividend. For most people who want to bet on the future, Disney stock is great. Now, when we start combing through the Dow for other long-term investments, you'd have to go company by company by company. So, for example, Microsoft is a member of the Dow Jones Industrial Average. Do you think Microsoft's share price will be higher in the future because most of its revenue is coming from the cloud? Will the cloud even be around 5 years from now? You see, when you start to ask those questions, you're doing what? Assessing risk. Coca-Cola is still a member of the Dow Jones Industrial Average. Do you think Coca-Cola will be around 5 years from now? Does it pay a dividend? Does it carry low debt? The answer is yes, it pays a dividend. Yes, the debt level is low. Do you think those shares will be around 5, 10, 15 years from now at a higher price? So what am I trying to educate you on today? What I'm trying to help you out is superior stock selection basically is formulated around your financial education, your ability to read an income statement, to follow revenue growth, and to follow the story in our economic world that is changing. Is Coca-Cola, for example, a member of the Dow Jones Industrial Average and selling its products digitally direct to consumer? Probably not, right? So is it really benefiting in the short term from this era that we're in, which is the digital era direct to consumer? Probably not. But is it linked to other brands that are? And these are the kind of things that we talk about when we talk about building wealth in the stock market, is getting that financial education. Remember, today's show's about your money, your age, and your wealth. Because there's some complexities in understanding which companies will be around in the future based on dividends and debt, this is why you need a financial education, because the people who learn these principles and learn how to choose good companies and buy shares directly are going to be the people who benefit the most in the next 5, 7, or 10 years. So this investing in a financial education, insofar as you're concerned, it is a huge thing because you want to get on the money train now and in the future. Most people are buying mutual funds. And that's the biggest problem that we have in our society, in the investing community, because they're like, well, I'm not smart enough to do all this research on stocks, which you actually are. I'll just buy a mutual fund that I think is good. And a mutual fund is nothing but a basket of stocks that you let other people choose. Well, if we know we're in the digital economy, and that is growing exponentially, why would you put your money in a mutual fund unless it's like a digital mutual fund that invests in companies and buys shares directly that are benefiting from this enormous change that's before us right now? It all comes back to your financial education, and I'm here to tell you, you can build wealth, you can get that education, and you can change your life quickly when you know how. So what are you committed to right now? Are you committed to learning how to trade and invest in the stock market so that you can cash in and be a part of stocks that are doubling every 2 to 5 years? Or do you want to play it more conservatively, put your money in a mutual fund and let someone else choose stocks for you instead of you buying them directly? Now, we both know that most of the money that's going to be made in the future is from direct ownership in the stock because there's no fees to own the stock, but there are plenty of fees associated with your mutual fund or indexed fund. So you're simply not earning as much as you can because you're paying other people to handle your money. There's no investor like the educated investor. And right before I challenge you with the last question about your money, your age, and your wealth, I'd like to throw this at you. My favorite stock play in the stock market is a stock split. When the board of directors of a particular company decide to cut the shares in half and reward investors who own them. In other words, my favorite stock split is a 2-for-1 stock split. It's really easy to understand. If I have 10 shares of a stock that's trading at 120 and the shares split, I now have 20 shares at what? $60 a share. Which means that when the market discovers that stock split, people who didn't own the shares want to get in and own them. And typically what happens on a really good stock split, the shares that broke off from 120 down to 60 within 2 to 5 years go right back up to 120. These are the tools that the wealthy use to invest. Shouldn't you? Shouldn't you be getting that financial education right now, regardless of your age and your wealth? The answer, of course, is yes. Think about stock splits, think about debt, and think about stocks that are benefiting from the digital era that will be around 5 years from now, because that's what's going to help you in today's stock market change your life over the next 2, 3, 4, or 5 years. Your financial future is brighter than you think when you get that financial education. Tyrone Jackson, a wealthy investor, saying, see you next time. Where? Right here on the next Trading Stocks Made Easy.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.